Hello, morning everyone. So welcome back to Morning Kappa. Aiman here. Happy Friday. All right. So looking at the S&P 500, well, it tanked, I think over 5% on yesterday's session, erasing a strong in its massive Southern news reversal following the Nvidia's earnings and the US job reports. So I think despite beating the expectation in the US adding more jobs, investors saw into the strength, fearing that the robust economic data would force the Fed to keep rates for higher for longer, right? So the sell-off I think was broad with Nvidia falling 3% despite its record results, right? So I think Nvidia's big guidance helped investor sentiment around the AI trade, which has, I would say, weakened in the recent session amid fears about the valuation concern and also the uh, uh, potential chip depreciation, right? So the I think the China A50 and also the Hang Seng Index also declined on yesterday's session, declining towards the end of the session after uh, the sudden news reversal following the uh, Bank of China decision to leave the LPR unchanged, right? So uh, I think while the market initially rallied in the morning and on positive earnings as well. So I think this external optimism quickly faded away as investors shifted focus back on on its domestic weakness. So selling pressure was compounded by the profit taking in the tech stocks with heavyweight like I think Alibaba and also um, Xiaomi, right, dragging the market lower. So cautious sentiment returned ahead of this close. So, looking at the WTI crude oil, well, it continued to hit lower on Thursday, right? Driven by reports that Ukraine has agreed uh, to draft peace plan with Russia, right? Sparking fears that sanction could be lifted by and also. So I think this geopolitical peace shock completely overshadowed the looming sanction deadline, forcing traders to unwind the war premium sentiment. Um, so yeah, I think the sell-off was further enhanced by the broader risk of a move in the in the equity market as well. The S&P tanking I mentioned earlier, as all track the negative sentiment in the stocks. So uh, still targeting for the support and hold our negative trading bias unchanged for WTI futures. So looking at our Malaysia market, right? Well, to look at the um, FKLI, well, it retreated on Thursday's session, reversing the earlier gains as intensified late selling and also the profit taking hit the overweight like uh, Maybank, right? Tenaga as well, despite the global optimism early yesterday. So the underlying sentiment was a bit neutral, where the sector saw tracking on the Nvidia's news initially, right? Investors now seems rotated out from the financial and also utility sector, fearing that the strong US outlook will lead higher for longer, right? In terms of interest rate. So I think the broader market was actually showed enough, strength, right? More gainers rather than losers in terms of yesterday, indicating that buying interest is shifting towards the mid cap and also the small cap. So just to show you all, right? Also, I think one of the reason here when I check the FBMS cap index, which is the small cap index, I noticed a bit of rebound near the 200-day SMA 9s. Okay. Right. So yeah, I mean, following the result of Nvidia yesterday, initially, the market optimism, right? And I think the comment from the CEO itself on the AI tech sector has jumped over 2% for our local market, which reflect the positive major market yesterday. Um, so in terms of stock, I think also I've been mentioning on this stock a few times now. So yesterday the MK has reached our resistance at 105, sorry, 150 cent on a strong trading volume. Also, the stock has breached higher to form a new high market structure. Now, if the 150 cent level can be breached, please do watch out for 106 sorry 1 ringgit and 60 cent ringgit level. Okay, also another stock that I believe have high potential for a breakout, CTOS right here. So if you see here, I think the price has been consolidating for quite some time at this level, right? So do monitor for a spike in trading volume. I think for the first confirmation, make sure the price to breach above this 21-day SMA line, and the second one is for you to wait for the high market structure breaching above this 91.5 cent level for better confidence, right? So yeah, for bonus stocks, TMK and also CTOS. Right, so this is our watch list for today. And in terms of our Malaysia trading stocks, we have KGB, Kennington Group. So today the stock has, yesterday the stock has breakout above this 5 ringgit and 40 cent level on a strong volume right here. So with that, we expect the momentum to remain bullish and the stock able to climb further to test the next resistance at 5 ringgit and 65 cent, followed by 5 ringgit and 90 cent. So again, if the stock to clear this 5 ringgit and 15 cent support, this could shift to a bearish structure. Also, together with that, we have Jaya Tiasa Holdings. Now that the stock is experiencing a pending breakout testing its 1 ringgit and 15 cent level. So if the stock remains bullish, right, we're expecting that the price to reach higher at 1 ringgit and 20 cent in the coming session, together with volume, right? Second resistance is at 1 ringgit and 25 cent. QNI at the 1 ringgit and 10 cent level for any attempt of reversal. So for in terms of FCPO, well, it fell sharply yesterday. I think snapping 3-day advance of the market, right? So yeah, the market was pressured by new I think cargo survey data showing that Malaysia export for the first half of November have plunged month on month, right? So confirming that the drastic slowdown in terms of demand. So the, I mean downside risk was still compounded after the MPOB set lower CPO reference price for December, which also adding the bearish sentiment. So this also aligned with our expectation, maintaining the negative trading bias and eyeing for the 40-50 support level. Right. So I think that's all from me. Stop here and pass the floor to Alex for his update. Thanks everyone and happy trading.
Okay, it's okay. I'll go first before Alex. So today we have a results review note on Sunway Construction. So Sunway Construction announced its 9-month 2025 results or earnings of 271 million ringgit, which actually exceeded ours and Street's estimates, making up 85 and 87% of our and Street's full year projections. Where in fact, during the 9 months, it only should meet about 75%. So you can see that Suncon has actually been exceeding estimates for the past 3 consecutive quarters. and this is mainly due to the higher than or faster than expected recognition for some of its data center projects, particularly for the JHP1X0 in Sedenak, Johor, and also one data center in Cyberjaya, which during the third quarter saw a very strong level of recognition. And in terms of its order book, it currently stands at about 5.4 billion ringgit. The last job it secured was sometime in May of this year, so it has been quite a while. So because of that, order book has been, pretty much on the downtrend. But we believe that there are still chances for Suncon to actually meet its target order book of about 6 billion. Now it has only won about 3.9 billion worth of new jobs. The reason why we think so that it could reach 6 billion is because its tender book size has actually increased to 18 billion ringgit from 14 billion in the second quarter this year. So that may increase its chances, and the tender book actually does not include any in-house job from Sunway, potential jobs such as the Seremban Central TOD development along with the planned hospitals by Sunway Healthcare Group. So, with that, in terms of earnings estimates, given that it was a very stronger than expected quarter, we are actually front loading some of the project recognitions to FY26 and 27. But given that the front load goes to FY26 and FY25 and 26, that actually impacts a bit of FY27, which we actually toned down earnings by about 2% or 1%. So all in, FY26 numbers are still higher, but and our target price, which is based on the target PE, actually rises to 7 ringgit and 32 cents from 7 ringgit and 26 cents. So in terms of catalysts, we view that any potential infrastructure job win could be another rating catalyst, given that the last infrastructure job it won was for the RTS, which I think last year or the last 2 years. And in fact, it is looking to eye for some infra projects such as the segment 2 of Penang LRT, which connects Komtar to Penang Central across the sea. So that's it from me, everyone. I'll stop here and pass on the floor to the next speaker, Meng. Thank you.
Thank you, Adam. So this is result review report on Malaysian Pacific Industry (MPI). So basically, they kick off the FY26 with strong results. A corporate dummy of 55 million. Up 37% year-on-year, which is in line with expectations. I think, if you look at, the revenue sides of things, they climbed to 635 million, fueled by the continued strength in the server integrated circuits demand. Geographically, revenue for Asia, US, and Europe charted a robust year-on-year expansion of 30%, 23%, and 11% respectively. EBITDA margin dipped slightly, 90 basis point year-on-year, basically weighted by, higher input costs as well as unfavorable forex movements. They declared an interim dividend of 10 cents, which is flat year-on-year, going FX on 4th of December. I think KLCI Malaysia delivered another quarter of Q&Q improvements in the profitability on the back of high utilizations, whereas Suzhou posted exponential year-on-year earnings growth. However, Q&Q wise, I think the momentum moderated in Suzhou because of seasonality. I think, in terms of outlook, they are scaling, it's lines, packaging lines, for AI-related, server-related packaging, from 16 to 28 lines, with utilization staying at a healthy level. Its new Suxiang plant is on track to commence in second half of FY26, year ending June, with an initial business pipeline of about $30 million. The group will continue to prioritize higher value segments, such as high power automotive, packaging, renewables, industrial, related packages, as well as the emerging robotics and defense segments. They are also still active, looking out for M&A opportunities following the recent acquisitions of Infineon Technologies Thailand for $78 million. Cost optimizations through process improvement and automation are also ongoing to mitigate the high cost environment. Now, no change to our earnings forecast as well as target price of 35 ringgit, pegged to an unchanged 30 times CY26 P, which is at about 1.5 standard deviation above its 5-year means. Now, we think at current price, the stock is still trading at a very attractive level as it pivots to the next technology growth wave. Maintain buy on the stocks, target price 35 ringgit. I'll just stop here and pass on to the next speaker.
Thank you, Meng. Good morning, everyone. This is Vanessa from RHB Warrant. So just a quick update on some of our very popular traded warrants, JPG-CN. Okay, so all right, so before I start, I'll just go straight to our warrant website. So there's actually three warrants that I would like to emphasize put more attention on today. So JPG-CN, actually on Tuesday, RHB Research has actually came out with a research report reiterating on buy. All right, so since 18 November, since 18 November, the closing price was 9.5 cents. All right, so 19 November, that's it actually remained unchanged, closed at 9.5 cents, but because during the intraday there's actually a lot of trading, up and down. But on the RHB Warrant website, we only recorded the end of day closing bid price. All right, so assume that whoever the investors, bullish investors, invested on JPG-CN, which is a core warrant over Johor Plantation Group Berhad, entered at 9.5 cents, and yesterday it actually recorded one of the highest price, because as well as the JPG mother share, it actually reaches the new high. So for JPG-CN, since it's a core warrant, right, it will actually move in the same direction. All right, so when it goes up, JPG core warrant will also go up. Right, so yesterday, if not mistaken, it actually hit 12.5 cents. All right, but as we saw here, it actually closed at 12 cents, which is the last bid price. So from 9.5 cents to 12 cents, maybe in absolute amount sounds a little not so attractive, right? But in terms of percentage, it actually gained 26%. All right, so how do we actually choose a very good warrant? For example, in this case, JPG. So you go to the warrant search by RHB Warrant, just go to Johor Plantation, right? And then you can actually sort it according to your preference, right? So normally I would look at sensitivity and then a decent effective gearing. So how do I look at a decent effective gearing? Is that I will look at the absolute price of the warrant. If it's not too expensive, so when the warrant is like 30 cents, 40 cents, then you know that the gearing effect is not so good, because one big movement is going to give you a lesser percentage gain on that. All right. On the other hand, you can actually look for something that is a fit to your risk profile and also your own criteria. So JPG-CN would be a very good choice for those who are still bullish on JPG. Okay, because yesterday it reached its new high. The warrant sensitivity is 1.5 ticks, and then the gearing is 4.5 times. So how do we actually get all these numbers, 1.5 ticks and whatever, like so many multipliers in all the core warrants? You can just use the RHB warrant website under price metrics. All right, so JPG-CN, just look at this price metrics, you'll be able to know what price to enter and exit following the mother share price. So you don't go in blindly, you go in with all these guides provided by RHB. Right, so besides from JPG-CN, I would like to also mention about 99 Speedmart C23. So C23 is actually new warrants that's issued by us last week. All right, so 99 Speedmart C23 also has reached its exercise price. I would say the exercise price has already been preset before when we issue it. So we set it slightly out of the money, which means that the exercise price is currently lesser than the share price in the market. However, because like I said, has been going up, then we know that it's slowly going very close to exercise price, and we call it at the money when it's equal. And then when it's over the exercise price of 3.38 ringgit, we call it in the money. All right. So when your warrant is getting further and further deep in the money, right, then the warrants will be more and more sensitive. Sensitive means that you will just invest in it, and then very slowly you will see it go up or go down faster. Okay. So last but not least, since today Aiman has mentioned about Jaya Tiasa. So I believe everyone has actually putting their attention on some of the technical analyzer mentioning stock. All right. So J Tiasa C6, besides from Johor Plantation Group Berhad TSH, J Tiasa C6 is also one of our very popular traded stock. All right. So J Tiasa C6, a call warrant, it's giving very good sensitivity. When you look at this price metrics, right, it actually moves every 2 ticks in the mother share. So when if you invest in, like, for example, 6 cents, right, if you invest in 6 cents and you just need 2 cents in the mother share to move, then 6 cents will become 6.5 cents. All right. Same thing applies if it drops. So 6 cents, if you invest in 6 cents, invest at 6 cents, and then it dropped to like 1 ringgit and 10 cents, and then you can only sell it back to the issuers or sell it back to the market at 5 cents. So it's a double-edged sword. If it goes up very fast, then it will come down very fast as well. All right. So with this, I would like to just end my presentation with some of the names that we have issued last week. All right. Some names like SCG Berhad CP, some of the technology counters, Suncon C52. So if you're aligned with Adam today, Suncon C52 is a very new Sunway construction call warrant. Okay, so with the exercise price of 6 ringgit and 80 cents. Yeah, so for all this sensitivity and effective gearing, it will be great if you can use the RHB website during the market hours to get the more accurate result using the price matrix. All right, so with this, I'll pass the floor to Alex. Thank you so much for dialing. And then I'll pass to Alex. Thank you.
Hi, morning all. Thanks for dialing in to Morning Kappa 8. So just a quick one from me. Essentially, we have a quick short note on the forthcoming semi-annual review of the FPM KLCI. The cutoff date is the 24th of November, and based on our assessment of market capitalization rankings as well as liquidity screening, we don't see any changes in the makeup of the component stocks in this review. There were some early concerns about whether or not IOI Corporation would actually clear the liquidity hurdles, but it seems that they have actually made the grade in the month of November. So all good. So I think so right now, I think in terms of the stocks that make up the reserve list, they are the 5 top stocks. They would include United Plantations, the 2 Gentings, as well as the yeah, and I think these stocks would make up the in case any one of component stocks drop out for any reasons, these would be the prime consideration for replacement. Okay, I think in terms of market outlook, we are still finalizing our view for 2026, but I think we don't envisage any major changes. And I think going forward, we continue to have a pretty rosy macroeconomic outlook. But I think the 2 key risks here for market expectations is the risk of the US economy undershooting and also the risk of a major US financial market correction, given concerns of growing equity valuation bubble pertaining to some of the AI names. So something to watch out for. I think investors need to remain relatively resilient. We continue to look for opportunities to buy in weakness, but not to chase stocks unnecessarily higher, and to look for opportunities to trim gains when there are gains to be had. All right, that's all from me, and that's all from our JPG research for this morning. I wish you all happy trading and have a great day, and see you guys next week. Cheers.